$2,630. That is how much Social Security benefits have been increased by President Trump in the new law that was just signed. This is the biggest increase in benefits in a long time and fulfilled one of the biggest promises the president made to seniors when he was campaigning for a second term, that he was going to do something to put more money in the pockets of senior citizens. So this $2,630 increase is a major victory and a gift to seniors that are eligible. I am going to walk you through who is eligible for this increase in benefits. Now, that is not everything that's going to happen in 2025. There are three more things that the president plans to do this year. I am going to explain that to you. And stay to the end of this video because there are emergency restrictions on Social Security benefits that were just announced by the Social Security Administration, and is going to also impact some Medicare beneficiaries who are going to see some changes in their benefits. So I am going to bring you that. If you are new here, thank you for joining me. My name is Kwame Kwade. I am a government benefits expert for 15 years. I have been helping seniors get the retirement benefits they deserve. I create content on Social Security, Medicare, Medicaid, food stamps, and any personal finance issues that affects seniors. And if you are new, thank you for joining me. Do me a favor and go into the comment section and let me know your city and your state, because I like to know where you guys are watching my broadcast from. And if you've been watching my channel for a while, thank you for continuing support for this channel. But we have a lot to cover today. So let's talk about the $2,630 Social Security increase. Now, we all know that the big bill that was recently signed by the president on July 4th did a lot of things, including increase money for seniors. Now, there's so much in that bill, and I've created a lot of videos to cover specific sections of the bill that affect taxes, tax cuts for homeowners, tax cuts for seniors, tax cuts for people in various income categories. But today, I want to focus on the $2,630 increase. Now, you may be thinking, how is this possible? You haven't heard of it. Well, it's because there are two things in the bill that a lot of seniors are not aware of that are going to impact them. The first one is that you are getting a $6,000 tax deduction. Now, it is supposed to increase, how much money is coming into your pocket. And so if you are receiving Social Security benefit right now and you are being taxed on your benefits, when you deduct this $6,000 benefit, you are going to get on average an additional $660 in benefits. And that is what is raising the average benefit to $2,630. So, how does this work? Well, let me explain. So, starting in 2025, if you're a senior citizen making up to $75,000 as an individual, if you're filing your federal tax returns as an individual, you can now deduct $6,000 on top of the regular standard deduction. And there's already a senior deduction that has been available to you. Now you're getting another $6,000 deduction on top of that. Why should you care? Well, the president promised that he was going to repeal taxes on Social Security. Did he repeal that completely? Well, not exactly, but he went as close as he could get in this bill. And so if you're making up to $75,000, you are going to get a $6,000 tax deduction that is going to raise your Social Security benefits by $660 to $750, which would take the average benefit from $1,905 to $2,630. What are you going to be able to do with $600 or $700 extra money in your pocket? Well, considering the fact that the average senior needs about $2,900, even without a mortgage, in order to manage all expenses that are needed this year in 2025, getting an extra $600 to $700 is a big deal. Now, if you're a married couple and you're filing your taxes jointly, then you are going to get $12,000 in tax deduction if you make up to $150,000. So as you can see, this is a significant increase in revenue or in income for seniors who have been struggling over the last couple of years due to rising inflation. Prices of goods and services have gone up and stayed up. And so, if you are hoping for relief in this bill, this is a big one. Now, there are three other things in the big, beautiful bill that are going to benefit seniors, and I'm going to talk about that at the end of the broadcast. But I wanted to explain where this 2,630 number is coming from and who it benefits. It benefits seniors who are taxed on their Social Security benefits, and up to 85% of your benefits become taxable if you reach a certain income threshold. So, this $6,000 deduction is supposed to help you and put an extra $660 to $750 in your pocket, whether you are filing as a single person or whether you file taxes jointly. That is the first thing that is happening in this bill. Now, I'm going to tell you some other things that are hidden in this bill that you may not know about, but could benefit from, because the headlines did not cover these deductions that are also available for people who are, 60 and above, that could benefit from these deductions that then begin to add up. And if you stack all these deductions together, the average senior could see about $1,500 in deductions that are coming back to you. That's money that's directly coming back to you if you decide to take all these deductions that are available in this bill. So the $6,000 tax deduction is not the only thing. The second thing in there that are of interest to seniors is that if you are now in the market to buy a new car as a senior citizen, and you decide to buy an American made car, a car that is largely made in the United States, you can deduct up to $12,500 in interest on that car loan. This is new. This is brand new. It's to encourage American made cars, is to encourage people to buy made in America, which is part of President Trump's America First principle, is to encourage domestic production and purchase of cars. And so if you are planning to buy a car in the next year or two, think about this as an opportunity to save money, because this is a big tax deduction that is available to you. The third thing is, if you are a senior citizen and you are working and you get overtime, now there is a tax deduction for you to be able to put more money of your overtime pay in your pocket. Now, a lot of places, overtime is time and a half or 2 times what you make on an hourly wage. And so think about this. The first $12,500 of your overtime, it will become tax deductible. That's putting more money in your pocket. That's what I'm saying. The average senior citizen, if you're taking all the deductions, now you're looking at about $1,500 in deductions that you could get back, money that's coming back into your pocket on a monthly basis. Now, the next thing is no tax on tips. Now, I saw a recent survey that says that a lot of seniors are still working late into retirement. So even though they are collecting Social Security, they are still a majority, a good 30% of seniors are still working in some shape or form. So if you're working and you happen to be in an industry where tips are a form of payment, I have great news. You can now deduct up to $25,000 in tips tax-free. So think about that. If you get, $500 in tips, $1,000 in tips, and the federal government was going to take maybe 25% of that. Now that money, the first 25,000 of it is coming to you tax free. So if you know somebody that should get this message, forward this video to them, share this video with them, because I'm going to share a lot of hidden things that are in this bill that the headlines are not talking about, that other people that are explaining this bill are not going into detail, that may be relevant to people in your family, friends, or people in your community that may benefit from it. But before I do that, let me highlight something that I'm going to talk about in a short period of time. I'm going to talk about Medicare. So if you are not in the right Medicare plan and you are struggling with what to do about Medicare coverage, we have a partner that can help you. The Trump administration recently sued a whole bunch of Medicare advisory companies that were misleading seniors. So this has become something that we are trying to help seniors find the right partner to be able to get you into the right Medicare plan. That is not going to cost you an arm and a leg, but be able to help you. Here's one thing you should know. You probably will spend or get more money out of Medicare than you actually get on Social Security. Because for a lot of people, medical treatment, some of these surgeries that you can have, or some of these treatment runs into the tens of thousands of dollars, and you're eligible for Medicare. You've earned it. Why? So the point is to get the value that you've earned. So stay tuned to the end of this video. I'm going to talk about our partner chapter, whose number is on the screen, and I'm going to put a form in the comment section and in the description for you to fill out so that they can reach out to you and get you into the right Medicare plan. Now, let's get back to some of the other hidden benefits in the bill that a lot of people are not talking about, but you should be aware of. Now, let's talk about tax deduction related to selling your home. If you are a senior citizen selling your home like anybody else as a single person, the first $250,000 in the profit you make from selling your home is going to be tax free. You don't have to pay taxes on it. The first $500,000, if you are a couple, up to $750,000, the first $500,000 become tax free. So as a single person is 250. As a couple, the profit you make on selling your home for $500,000 profit, not the value of the sale. If you make $500,000 in profit as a couple, that is not taxable. That is still true today. That was something that a lot of people were worried about, that was going to be gutted in the bill, and it is still true today. And then talking about home ownership, you can still deduct mortgage interest up to $750,000 in value. So if you have a loan on your house up to $750,000, you can continue to deduct that mortgage interest that is still there. Child tax credit. If you know somebody in your family, maybe you have grandchildren that are eligible for the child tax credit, that has been increased to $2,500. My point is that there's so much in this bill that is not being talked about that you need to be aware of, that I want to make sure that you know that you stack up all these deductions and you can get about $1,500 a month in money back into your pocket of things that are in this bill to benefit particularly senior citizens. Now, there are some seniors that feel that this bill did not really go far enough to help you in your situation, especially the 50% of seniors who do not file taxes on their Social Security or do not make enough benefits in order to file federal taxes. Then the question is, what is in this bill for you? Well, there are plans this year to do three major things that I think you will find helpful, and it will put more money in your pocket later this year. So not 2026, not 2027, I'm talking 2025. There are three additional bills that are being considered that I think will put more money in seniors' pocket and will make 2025 a historic year for seniors that are on Social Security. I know every year there are promises that are being made to increase your benefits, to provide more income, to put more money in your pocket, and it never happened. Well, I think 2025 is going to be a turning point where seniors are going to feel that if all these policies I'm going to talk about are passed, you're going to see more money in your pocket. So let's walk through the three things, and then I'm going to talk about the two Medicare and Social Security restrictions that are going to happen that was just announced recently. So let's talk about the good news, and then we'll talk about the not so good news. So the first thing I want to talk about is the cost of living adjustment. So historically, Social Security cost of living adjustment has been about 2% on average. In a very good year, it's about 2.5, 3%. Now, the problem is that that number does not really reflect the true costs that seniors are facing when it comes to rising cost of living in various things that affect seniors that do not necessarily get reflected in the cost of living adjustment. So, what am I talking about? Things like prescription drugs that affect seniors, things like healthcare costs that at a certain age increases dramatically for seniors. All these things do not get factored into the Social Security cost of living adjustment. So, what happens is that seniors continually feel behind every time the COLA is released. There's a lot of media noise about it, and then the number comes out and it's a letdown. So, why is the number always so low? Well, the problem is how Social Security benefits increases are calculated. Now, before I go further, if you are new here, thank you for joining me. If you are a regular viewer of the channel, I am glad you're here. Please let me know your city and your state. Hit me up in the comment section. I just like to know where you guys are watching this broadcast from. So let me get back to Social Security cost of living adjustment. So what is happening is that the number is so low because the method that is used to calculate your cost of living adjustment is, in my opinion, and a lot of people in Congress agree with this, it is wrong because it is using an inflation index that is for urban wage earners and clerical workers. So essentially, the government is looking at prices of goods and services that affect urban wage earners and clerical workers and using that to determine Social Security increases for seniors. That is how it's been for a very long time, since the 1970s. The problem is that that does not accurately capture the costs that affect seniors on a daily basis. So there's been a proposal in Congress to change that, to completely scrap the current way of calculating your Social Security increase and use a new method, which will be called the CPIE, which is Consumer Price Index, and the E will be stand for elderly. So what's going to happen is that each year, the third quarter of the year, they are going to look at prices of goods and services that affect seniors. Anything in terms of cost that seniors are facing on a regular basis, they're going to track those big buckets of things, transportation, healthcare, prescription drug, rent, etc., food. And then they will compare the price increases or price changes in the third quarter of this year to the third quarter of last year. And if prices have increased, then they will adjust your Social Security benefits accordingly. And if prices have decreased, then your benefits remain the same because your Social Security benefits by law cannot go down. They can only go up or stay the same in terms of annual cost of living adjustment. But by using the new method, the Consumer Price Index for the elderly, CPIE, and you can Google this, there's a bill, a bipartisan bill that is already in Congress that is supposed to do this both in the Senate and in the House. And on top of giving you a new method that reflects the actual cost that seniors are facing on a regular basis, it will also put a new floor on how much Social Security increases seniors will get regardless of what happens. And so, right now, as I mentioned, cost of living adjustment is typically around 2% on average over the last 15 years. Well, With this new bill, they will set it at 3.5% minimum. And so, in addition to changing how Social Security cost of living adjustments are calculated, they will also give you a minimum increase or a minimum cost of living adjustment of 3.5%, and it cannot go below that. That is to ensure that seniors are not losing money on a regular basis due to inflation of price increases, because over the last 10 years, the government's data shows that seniors have lost 20% of their purchasing power. How much you can buy with the same Social Security check, seniors have lost 20% of their purchasing power due to inflation and the fact that Social Security cost of living adjustments have not caught up with inflation. So that is a fact. There's no denying that. I know you feel it in your pay, in your Social Security check. A good example to see how things have been out of whack is that you look at Medicare Part B premium increases on an annual basis, and it's always 2 or 3 times higher than Social Security cost of living adjustment. So the same government that is giving you a small Social Security increase is also increasing your Medicare Part B premium by a higher percentage, which is an acknowledgement that medical expenses are rising faster. And so your Social Security check should also reflect that increase. So that is the first thing that is being looked at this year by Congress and the president in order to make the playing field a little fair for seniors who are struggling and are on low income and need the assistance that are not getting it. Now, the next thing that they are planning to do is a major Social Security increase that has been in the books or in the works for a long time, but has not gained traction, even though it has broad bipartisan support. This particular bill has been around for about 3 years now, and in both chambers of Congress, there are senators across the aisle and there are Congress people across the aisle who want to see this change happen. The problem is that, you know, it has not been brought to a vote, and that is the Social Security Expansion Act. This legislation is going to do two things for seniors. The first one is that it's going to secure and the longevity of Social Security. You may have heard in the news that Social Security is running out of money and that by 2033, automatic benefit cuts will hit everybody. Everybody on Social Security benefits come 2033. If Congress does not do anything to fix the problem, is going to get an up to 23% cut reduction in your benefit. And nobody wants that. But the problem is that if nobody wants that, then something has to be done. And so the Social Security Expansion Act is to help fix that problem and also give you an increase. So, what am I talking about? Well, the Social Security Expansion Act will increase the taxable income threshold for Social Security benefits so that more money can come into the Social Security system. You may not know this, but not every income is taxed for Social Security benefits. What do I mean by that? If you are low income, you're probably paying Social Security taxes on all your income. If you are middle income, you're probably paying Social Security taxes on all your income. If you are high income, you are only paying Social Security taxes on a percentage of your income. So it means that the lower income and middle income category are the ones that are supporting Social Security with all of their income taxable. Meanwhile, people in the higher income category only have a certain percentage of their income that is taxable and contributing to the Social Security pot. And so, as Social Security is facing demographic challenges, there are a record number of people that are claiming benefits. There are less people that are working and paying into the system. There is a lot of pressure on the Social Security system. And so, One way to solve that problem is to remove the cap. So in 2025, if you make up to $176,100, you have to pay Social Security taxes on all your earnings. But if you make more than that, anything above 176,100, you do not pay Social Security taxes. So if you're a millionaire and you make $1 million, only $176,000, 100 will be taxable for Social Security purposes. The rest of your income does not contribute into the Social Security system. Only your first 176,100. This has been how the law has been for decades, and it's adjusted for inflation every year. So this year is the first 176,100. Well, in the Social Security Expansion Act, and I'm taking my time to explain all of this because I want it to make sense to you. I want you to see the reasoning behind why this legislation is important. So the Social Security Expansion Act will move that $176,000 to $250,000. So if you make up to $250,000, you will pay taxes on Social Security taxes on your benefits. So it's not a big increase, but it is a meaningful increase that will solve the Social Security problem that we're facing for about 75 years. You heard that right. If all they did was increase your Social Security taxable income to 250,000 from the current 176,100, it will solve the problem for 75 years. But not only that, there is even something better in that process. If they do that, seniors are going to get a $200 increase in their benefits right away, an additional $2,400 a year in benefits to all seniors making Social Security and disability benefits. So not only is this one bill going to solve the future problem Social Security is going to experience, but it's also going to put more money in your pocket. And so that's why I am excited about it, because I think that it kills two birds with one stone. You get an immediate increase, which a lot of seniors need and really want to happen. And you also don't have to worry about Social Security running out of money in 2033, because this is going to solve that problem, or at least for a long time. And then the third bill that is being considered this year that I think is going to put a lot of seniors in a better position financially is the Social Security 2100 Act. Now, this is a bill that is supposed to fix a big problem that has existed with Social Security for a long time. There are a lot of seniors, through no fault of theirs, are getting the minimum Social Security benefit. Let's say that you worked for 30 years, you worked for 40 years, but you worked in the low wage job. And so you paid your taxes, you contributed to Social Security benefits, and you were looking forward to retiring. And then you get your first Social Security check, and it's $1,000 a month. Well, there's a lot of seniors in that category. And so if you're getting $1,000 a month, or even $1,200 a month in 2025, that puts you, according to the federal government, in poverty. It means that you are living in poverty. So why should you care about that? Well, if you're living in poverty, a lot of seniors are struggling because once you pay your rent and you you pay groceries, probably there's no money left for other things, including transportation, insurance, and all these things that are hitting seniors, and Medicare cost that keeps growing every year. So the Social Security 2100 Act is a bill that is in Congress that is going to fix that problem. And what they are trying to do is that rather than increasing benefits right away, they are going to put seniors who are in receiving the minimum Social Security benefit, they're going to put you at 125% of the federal poverty level. So each year, the federal government releases what they consider the federal poverty chart. And it's a chart that shows you by household size who is living in poverty. So if you're a household of one, there is a number that tells you if you're living in poverty or not. If you're a household of two, there's a number that tells you, and so forth and so on. Well, the government releases that number every year, and it consistently shows that a large percentage of seniors are living in poverty because they're getting close to the minimum benefit. And so, what this legislation would do is that it will put the minimum Social Security benefit at 125% of the federal poverty level. So each year, when the federal government releases their federal poverty chart, if you are a senior that is receiving the minimum benefit, you automatically know that your benefit is going to be increased to 125% of the federal poverty level. So in 2025, what does that mean? How does that put money in your pocket? Well, if the bill is passed this year, you are going to get an additional $500 to $660 in benefit increase, which means that a senior citizen receiving the minimum benefit is going to go from about $12,000 in annual Social Security benefits to $18,000, a $6,000 increase. That is going to make a dramatic change in the lives of those seniors who are getting the minimum benefit. So if you put these three things together, the Social Security Expansion Act that gives you $200, but also solves the Social Security problem for 75 years. If you put together the Consumer Price Index, the CPIE, that changes how Social Security benefits increases are calculated and puts a 3.5% floor so that you would not get a Social Security annual increase less than 3.5%. And then you stack on top of that the Social Security 2100 Act, which gives you about a $660 increase. All of a sudden, you can see that real relief is going to come to seniors this year. So, those are the three bills that are in front of Congress that will make a meaningful change, a dramatic change in how benefits that are coming to seniors and money that's coming into your pocket this year. And so, that is what I'm excited about because I think that the big beautiful bill did a lot for seniors, but there is more to do because not every senior is benefiting from that bill. In fact, 50% of seniors are not going to be able to take that tax deduction because they don't make enough money to pay Social Security taxes. And so the three things I just talked about is the real hope for those seniors this year that can get a real meaningful increase. And these legislation, I've given you the names of the legislation because they are actual bills. I'm not making this up. I am not suggesting this. I am saying that these are actual bills that are currently in Congress that can be passed and are being considered that will make a meaningful change in the lives of seniors this year. So let me know what you think about all of this. Which of these bills will make a meaningful increase in your life? Let me know in the comments what you think about this. And I promised you that I'm going to talk about Medicare and our partner chapter. But let me explain why this is so important to me. So I mentioned that the Trump administration just sued a whole bunch of Medicare advisors, the DOJ, because they were getting kickbacks to push seniors into specific Medicare plans. And so seniors were being put in Medicare plans that was not good for them, but were costing them a lot of money. But here's the thing about Medicare. You are probably in your lifetime on Medicare going to get more benefits paid on your behalf than you get in your Social Security check because Medicare covers healthcare and healthcare is expensive. But you have to know and be in the right plan so that you can get everything that you deserve. That $20,000 surgery or that $30,000 treatment, all those things stack up. And so seniors on average get more money out of Medicare than they get out of Social Security. That's just a fact. You've earned it, you've paid into it, you should get what you deserve. But the problem is that there are 24,000 Medicare plans out there. And so the average senior does not know, what plan to choose. And so 90% of all seniors are in the wrong Medicare plan. Well, Chapter Medicare, our partner, is there to fix that problem. They want to be your advocate, be in your corner, and it comes from a personal experience for them. One of their co-founders watched his parents struggle with Medicare enrollment, getting into the wrong plan, paying hundreds of dollars in Medicare premiums that they shouldn't have been paying, and that motivated them to start this business. And we've sent them over 2,000 of our viewers like you who have been helped and put in the right Medicare plan. The advice is free, it is unbiased. They will check whether you're in the right plan. And if you're in the right plan, then good. They'll let you know. If you're not, they will help you get into the right plan. But the window to do that may be closing. So call the number on the screen today, 539-205-2147, or go to the special website they've created for us, askchapter.org/insider. I'm going to put that link in the description and in the comments, and you can fill out a short form and they will reach out to you and help you. These are the people you're going to be speaking to, real advisors that can help you. And these guys are highly trusted, and they will save you $1,100 a year, which is not chump change. That is sizable amount of savings on your Medicare. So call Chapter, our partner, and let them know that Benefits Insider sent you. So now let's get back to talking about the restrictions that are happening with Social Security and Medicare that you need to be aware of so that you can prepare for it. So the first one is Social Security Administration came out with an announcement that is going to affect millions of seniors. And actually, your benefits may be stopped if you don't make this change. And I'm not being dramatic about this. This is real. So stay with me and I'll walk you through it. So there was an internal memo that was released by the Social Security Administration recently, and I'm going to tell you that the title of the memo is called an emergency message, EM 25040. So this is a memo that was circulated in the Social Security Administration that is not a public memo and is supposed to instruct the Social Security workers on what to do regarding these new restrictions. So I I have gone and distilled it from Social Security language, and I'm bringing you the details so that you can prepare for it, because there's a date that you need to pay attention to, which is September the 30th. And if you don't make this change by September the 30th, your benefits are going to be stopped. So let's get into it. So basically, the Social Security Administration will stop issuing paper checks for all Social Security beneficiaries, including retirement, SSDI, and SSI. All new and existing beneficiaries must receive direct deposit to a bank account, or you have to sign up for the Direct Express debit card. Direct Express debit card is a government backed debit card that allows you to receive your government benefits electronically. So if you cannot get a bank account for whatever reason, and you cannot get a prepaid debit card, then you can get the government debit card called Direct Express. It has very low fees. It allows you to get your government benefits electronically. It functions like at any other debit card. You can use it to pay bills, to make purchases, shop online, etc. But here's the point I'm trying to make. Starting September 30th, 2025, which is about what, 6 weeks away, or maybe more, 2.5 months away, the government will not send you your paper check. So if you are getting your Social Security benefits by paper checks, the show is over. You are not going to get your check. You have to switch to direct deposit by September the 30th, or your benefits are not going to show up in your mail. So if you cannot get a bank account, you have to sign up for Direct Express. This change is part of the federal government's effort to modernize the Social Security payment system. You may have heard of Doge, Elon Musk and his Doge team. This is one of the things that they accelerated and made happen very quickly. And so the aim is to reduce fraud and cut costs associated with mailing paper checks. So the Social Security Administration will no longer offer the option to receive paper checks when you apply for benefits. So this applies to existing beneficiaries who are already getting checks. And then any person that's applying for benefits going forward, you cannot check the option to receive your check in the mail. That's not going to be an option anymore. Now, the rule is based on an executive order that President Trump signed, and it's called Executive Order 14247. And so this is all set in motion by that executive order. And now that emergency message, that internal memo, internal letter that the Social Security Administration sent to its employees is supposed to implement that executive order. And that memo is EM 25040. Now, there are a few exemptions. There are a few people that can still get paper checks. And I'm going to tell you it is three categories of people. The waivers, but the waivers are going to get more difficult. So waivers are extremely limited, and there's a big change. If you think you should still be getting paper checks, you cannot go to your Social Security office and request a waiver. You have to now go through the U.S. Treasury Department. So that's a big deal. It's a big change. They want to make sure that very few people are able to get paper checks going forward. They want to make sure that a large, overwhelming majority of Social Security beneficiaries are getting their money through electronic payment. And so the waivers are going to be extremely limited, and they must be approved by the U.S. Treasury, not the Social Security Administration like it was previously. Now, there's only one category of people that are going to be allowed to get paper checks or paper Social Security checks, like automatically get it. And I thought this was a joke. And so I had to research it, because when I saw it, my eyes was like, okay, this does not make sense. But here's the thing. Individuals born before May 1st, 1921. If you were born before May 1st, 1921, and you're still alive and you're getting Social Security benefits, you are now 104 years old. You are the only group of people that are allowed to get Social Security checks by mail. That's it. Everybody else who think they should be getting Social Security checks by mail has to apply for an exemption. And here are the three groups of people that may apply for an exemption. The first one is people who have severe mental impairment, preventing them from using electronic payments. The second group of people are people who are living in remote areas of the country that don't have access to electronic payment infrastructure. That is the government's own language I'm repeating to you. And then the third category of people are people who, for some reason, cannot get the direct express debit card due to unique circumstances like card suspension. So if you feel like you are part of those three categories of people, here is how to apply for an exemption to get paper checks. You have to call the US Treasury Electronic Payment Solutions Center. And the number to call is 1-800-967-5042 to request a waiver. Remember, you cannot get a waiver through the Social Security Administration. You have to go through the US Treasury Payment Solutions Center and get it approved. So if you decide not to get a direct express debit card or to open a bank account and have your Social Security benefits sent to that account, then what's going to happen? Well, your check will be stopped after September the 30th. And Social Security staff have been informed to encourage seniors who cannot get a bank account to sign up for the direct express debit card. So let me explain what the direct express debit card is in detail, because a lot of seniors do not know what this card is about, and so are hesitant in applying for it. So the direct express debit card is a MasterCard that is backed by the US government. This is a card that the US government Treasury Department has created to help people get their federal benefits electronically. So it is for Social Security, veterans benefits, and some other federal benefits payments. So it acts like a regular debit card, and it has a customer service number that you can call. It is safe because the money is transferred directly to your debit card. It is convenient because you can make purchases and get cash anywhere that debit cards are accepted. MasterCard debit cards are accepted, which is pretty much anywhere. And I said it's recommended by the U.S. Treasury Department for federal payments. So it is a debit card that backed by the U.S. government. So it cannot get any better than that. The government is supporting this card. So basically, you can use it to make purchases, get cash back, do anything that you can do with a regular debit card, including paying bills online. Now, there are no fees to get cash back with purchases, and you can pay bills online at grocery stores. You can shop at, pharmacies, gas stations, doctor offices, anywhere you need to spend money. You can use your Direct Express debit card. Now, I am not being paid to tell you this. I'm just sharing with you that the government has a debit card that allows you to get your Social Security benefits electronically, and the category of federal payments that are eligible include Social Security benefits, but also U.S. Coast Guard benefits, Department of Labor benefits, Office of Personnel Benefits, U.S. Railroad retirement benefits, Social Security, of course, and veterans benefits. All categories of veterans benefits can also be collected on the Direct Express. Now, there's one thing I need you to know about Direct Express. You can only receive federal benefits on that card. So it is not going to be your bank account. So if you're a senior that is working, you cannot send your check, your paycheck to your Direct Express card. It doesn't work that way. You can only receive government benefits on your Direct Express card. I want to make that clear. So it's supposed to just help you get your government benefits. So that is what I wanted to share with you regarding this breaking news with the Social Security Administration that come September 30th, you are not going to be able to get your federal benefits by check. And so make plans now. And if you don't make plans, they're going to make plans for you. And the plan they're going to make for you is that they are not going to send you a check. Paper checks are 16 times more likely to be stolen, lost, or altered compared to electronic payments. And the government is going to save a lot of money by processing, electronic payments versus sending you a check. And electronic payment is safer. So what can you do? Open a bank account or sign up for the Direct Express card, or call the U.S. Treasury Payment Solutions Center if you feel you deserve a waiver. And be prepared to provide documentation, including a notarized statement, to show why you need a waiver. So after September 30th, no more paper checks, and a very tiny group of people, including people who are 104 years old or above, are going to be the only people that are going to be allowed to get paper checks. So that is all I wanted to bring you this Friday evening. Thank you for hanging out with me. If you are new here and you like what you heard, hit the like button, hit the subscribe button. If you've been watching my channel for a while, thank you for continuing to support this channel. And I appreciate your help and your support, and for continuing to find value in the content that I create for you. I'll be back live tomorrow with more news and updates, anything in and out of Congress that can affect your benefits. I will be bringing it to you tomorrow. So stay tuned, and I'll see you all tomorrow. Thank you for joining me.